Hey guys, welcome to Lumovest. So breaking news this past Friday. President Donald Trump has instructed the US SEC to study whether it makes sense to stop requiring American companies to report quarterly earnings. As Trump might say, this is huge. After the Great Depression, the United States Congress passed the Securities and Exchange Act of 1934, which required American publicly traded companies to file reports on their financial performance every 3 months. It was put in place to build stronger confidence and transparency for the investors. For the past 80 years, U.S. companies have been releasing earnings reports and hosting earnings calls every 3 months. Companies like Google, Microsoft, Apple, Facebook, they all release financial performance every 3 months. And now, President Trump is opening up the possibility of getting rid of this near-century-old convention. Moving towards the 6 months convention would put the U.S. disclosure requirements in line with the European Union and the United Kingdom. So how did Trump get this idea, and does it make sense? That's what we're going to talk about. Now, before you forget, subscribe to our YouTube channel so you get all our videos helping you become a sophisticated investor. So how did President Trump get this idea in the first place? Turns out, many CEOs of America's largest corporations have long vouched for a switch over to a 6-month reporting period. Businesses have long complained that the quarterly reports require company executives to focus too much on the short term. Even President Obama had criticized the quarterly disclosure convention. Back in 2015, Obama said that he had talked to a large number of businesses executives who told him, because they've got quarterly reports to shareholders, and if they've made a long-term investment that may pay off way down the line, or if they're paying their employees more now because they think it's going to help them retain high-quality employees, a lot of times they feel like they're going to get punished in the stock market. And so they don't do it, because the definition of being a successful business is narrowed to what your quarterly earnings reports are. But we all know Trump doesn't get along with Obama. So what made him bring it up now in August 2018? Apparently, it was raised by the outgoing Pepsi CEO, Indra Nooyi, when Trump asked a group of CEOs how to improve growth. Trump thought it makes sense, and here we are, potentially witnessing a historic change in how U.S. companies disclose earnings to the investment community. Now, does this make sense? The SEC is evaluating the feasibility and the resulting impact, but we thought we'd present you some arguments for and against this change. Proponents for this change argue that the quarterly reports divert too much attention to companies' short-term performance. Things like whether the company earned more profits than expected in a 3-month period, or whether they're changing the dividend amount per share. This has a real impact on stock price when investors make their buy and sell decisions based on the quarterly financial results. So it puts a lot of short-term pressure on the company executives. Maybe they could have invested more in growth and expansion, which would generate more value for the shareholders in the long term, but will result in less profits in the next 3 months and less dividends. It's a real burden and a drag on stock price that we often see among some otherwise great businesses. On the other hand, proponents against the change argue that without the quarterly financial reports, investors could be blindsided to important risk factors that could damage their portfolios. A lot can change in a 3 to 6 month period, especially with all the disruption in technology. So without the quarterly disclosures, investors would bear greater risk in the stock market. We'd love to hear what you guys think. Do you think the US should switch reporting from every 3 months to every 6 months? Leave a comment below and let us know your thoughts. Hope you guys found this helpful, and if you did, then share it with your friends and family. See you all next time.